Hello, trading is closed on February 20th, 2024. We always do our disclaimer first, go over our calls, and then make some predictions. It's my trading plan for Wednesday, 21st of February 2024. Please trade at your own risk. My calls can be wrong. If you want to order the webinar in which I talk about my system, MEJT system, I'd appreciate a Gmail address if you have one. Look for the pattern with the early high. You can actually read this pattern either way. Later on, I'm going to go over why I feel it's the pattern with the early high. And we said that I thought it was going to lead to lower prices as long as this high held, and that's what happened. Here's what we said. We had null target 49.7283 gets crossed off the list. Support under the target, support broke, support again right there, support broke. This last little blip up in the last 5 minutes doesn't impress me. I'm more impressed by support here, by resistance here. Doesn't make me right. In the afternoon, MEJT gave a buy signal and an ultimate buy signal. Doesn't tell the next target, it just says we have higher targets, and they printed. There was an optional lower target, and that printed too. Well, I make these calls about the early high and early low based on a 32-day pattern. The 32-day pattern is not copyrighted, but some of the details of the pattern are copyrighted, and I can't discuss all about them. What I'm going to say is this pattern to me is the same as this based on the change in trend times. We had this early low about the same time. We had this late high about the same time. And that's what I look for in the early high pattern. Now, a friend of mine who's a very experienced trader in one of my chat rooms felt this was an early low pattern. And the truth is, I can make it work for that pattern too, but you have to call this high a late high. This is very late to have the early low pattern. But you can do that. I mean, nothing's perfect, and that can be allowed. Let's go over how I come up with these and why I think that's what it is. Now look, this is 32 days ago. This is the standard pattern. There's an early high, a late high by the end of the day. This is the pattern I see. Sometimes the pattern's not clear. And when it isn't clear, I go back 2 calendar days, which you couldn't go back 2 calendar days for today because 2 calendar days earlier the market was closed. But if you look here, two calendar days earlier, there was a drop in the middle of the day, and that's compatible with this being the early high pattern. Now, just to show you that things aren't always black and white, you could argue this was a rally in the middle of the day. It doesn't break any rules. It's not how I'm reading it, but that doesn't make it right. Trying to show this, and it's being blocked by some stuff. Well, here's the same early. This is the same pattern. If you go back another 32 calendar days, you have the early high, the late high. That's the standard pattern. Here's the same pattern, early high, late high at the end of the day. You go back 2 calendar days. In the middle of this day is a dropping. That's the standard thing I look for. You could argue that this is a rally in the middle of the day. It's really the times which count rather than the direction. I can't argue with you. It just isn't how I read it. And here we go back another 32 calendar days, early high, late high. It's the same pattern. You go back 2 days. You can say that's not a decline in the middle of the day, it's a rally, but what counts is the times, not the direction. And this high and this low help to identify the early high pattern. You go back another 32 calendar days, omitting days when the market's closed, you get the same pattern, the late high. You keep doing it and all, the market doesn't have to rally. But there's still your early high, your late high, and you go back 2 calendar days and you get this drop right in the middle of the day when it's supposed to be. And you go back another 32 days and you see the early high and the late high. And the pattern just keeps on repeating. There's the early high, the late high. Here's 2 calendar days. You could argue it's a rally. I can't really fight with you, but I'm calling it this. Again, you can have some interpretation. And this is, again, the pattern with the early high, the late high, and you go back 2 calendar days and you're dropping the middle of the day. So that's why I think it's the pattern with the early high. But I have to admit that it's really kind of iffy. I'm just going to do my analysis as if it's correct. And if I am correct, we're going to probably gap tomorrow because this is a very mixed signal. This is a positive pattern. You have a gap down, lower low, close over all the lows. You maintain that. You should rally even if you don't close higher. The wave count has to say something else though. Here's how I'm counting this from the October low. We think we're in wave 2 of some degree. And this is my main count. We have an A and a B, and I think we're in wave C. That's 5 waves down, as we'll see, and this could be counted as 2. It's not the only way to count it, but let's just focus on what's happened since Friday's high. From Friday's high, you can count 5 waves down, and wave 5 is a Fibonacci relative of waves 1, 2, 3, and it's equal to wave 1 down. Waves 1 and 3 are equal. I mean, that's a clear 5 waves down. And if you look at what's happened since then, there's your wave A, and there's your wave C, and they're equal. So that could be the end of wave 2. And if it is the end of wave 2, and if this alternates count is right, you're in wave 3 of multiple degree on the downside, and I wouldn't want to be long. If that's the right count, of course it could be just A of 2, you don't know. We're going to have a pretty hard drop right from the open, ideally. So tomorrow's open should substitute for today's close. I mean, we didn't get a rally into the close the way we normally see. As far as a straight line drop, you can call that a straight line drop, but that pattern usually closes by the low, and if it doesn't close by the low, I don't consider it a complete pattern. So we're looking for either gapping up smartly or gapping down smartly tomorrow. Mixed signals rules, here they are. Tomorrow's pattern has early low regardless of where we open. It's positive, we gap down, hit a lower low, but close over intraday lows. If it's maintained at the open, we should trade higher, even if we don't close higher. But it's negative, that's a pretty negative wave count we have. It's compatible with a big drop. And when this pattern doesn't lead to a rally, it should lead to a big drop. It shouldn't be over. Today's pattern didn't have the close near the high nor the straight line drop I expected. The straight line drop pattern should close near its low, and that didn't happen. The odds favor this being resolved at tomorrow's open by gapping smartly, with tomorrow's open substituting for today's non-committal close. So we'll see if we get a strong gap open tomorrow. Sometimes you close unchanged, have the big gap on Thursday, and sometimes it just doesn't work. But the most common thing is a strong gap tomorrow. While this is positive, we gap down. It's about as negative as you can get. and I'd be afraid of staying long. And even if we go up, I think there's a good chance that high is going to hold. I think tomorrow should have the early low, and that's today's call.